Now is Ian Wishingrad, founder and creative director at Big I'd Wish. Ian, it's great to have you with us. You know, this seems like a big concern for investors.
Yeah, for sure. I think we should look to the Super Bowl. What you're going to about to see is about a big announcement from Audi, which is part of Volkswagen Group, and Porsche. Everyone's finally going to come out with their big electric vehicles and come out with a ton of marketing dollars. So even though he was first to market, I think it's going to play very similar to the Apple story from the 80s. They come out with a big hit, people like them, then everyone else catches up. Windows comes and eats their lunch. They go down for a while and they have a historic comeback. That's my prediction for the Tesla story. But this is the beginning of a down period for them, especially with oil prices getting lower.
Yeah, that's all interesting, Ian, because we know their earnings are going to be coming out the first week of February or so. Is this almost sort of like a precursor or like a teaser for what to expect going into February? That way they're kind of downplaying expectations when those numbers come out.
Absolutely. I mean, I think, Elon Musk did what he could on the PR side to make as much noise as possible to just make sure people heard about him, top of mind, believed in him, as he said in like that 60 Minutes interview, like they were weeks away from dying. So I don't think they're on the verge of it like that, but he's got to really tighten and batten down the hatches. And what's really interesting, I'm going to use Porsche as an example. Porsche, for the longest time, just made the 911. They were a small company, and people thought they were going to die when they started making all these SUVs. But the SUVs fueled their bottom line or top line and allowed them to make even better cars. That's why he's moving the prices up on the high-end Tesla X and Tesla S to be able to afford to be able to make the three at the right price. But the commercialization of that is proving to be extremely difficult. And then you have all these other brands coming into the space with brands that people love, know, and trust. It's going to get very, very, very sticky.
Ian, no doubt that this letter sounded somewhat dire, and for all of those employees, of course, we're thinking about them that woke up and saw this in their inbox. Doesn't matter if you're an employee that's leaving the company or even an employee at the company. A very striking letter here, but I say dire in the sense he did say that the road ahead is, quote, very difficult. Also went on to say that the company faces, quote, an extremely difficult challenge, end quote, in competing in the current environment. And this seems to be the first account where Elon Musk is on the record, at least in the past year. My mind is going back to when he said the stock was overvalued years ago, that he is really telling investors, like, let's cool the jets a bit.
Not only that, Elon Musk, more akin to Steve Jobs, is part of the brand DNA. When you're buying a Tesla, you're also buying an Elon Musk, essentially. They are inextricably tied to one another. And he understands that a huge component of the stock exchange is emotion and storytelling. So he's now trying to gin up some empathy for himself and the stock so people don't come out and try to short sell and annihilate him. He's trying to say, I'm taking all the necessary fiduciary responsibility steps to make this a better company. I'm reducing workforce, I'm changing price points, I'm trying to run this in a way that we'd see some like takeover from a private equity firm. He's saying, I'm being fiscally responsible, so chill out, please.
We know that electric vehicle tax credit is being phased out. All the more reason why Elon Musk has been putting the pressure on people to get their Model 3s now, and he's also dropping the prices on the cars as well. Ian, do you feel like these cuts would have happened at Tesla if President Trump kept that tax credit going?
I think obviously that was a huge incentive for people. Whatever, like $7,500 or something is a nice big, especially in a car purchase, a big difference. I think more importantly, it is a little bit of that in combination, the fact that when gas prices go crazy, gas hasn't gone crazy, and when they started to rise, they're already starting to fall again. They have very short memories to start going back and buying SUVs, and then all of a sudden gas goes to $4 or $5 a gallon, people freak out. I think the other thing that he's really got to focus on is that Model 3 competitor for his own self is that Model Y he's talking about. Everyone's moving to the small, mid-size SUV, and he's got a sedan. And if you heard Ford, they're pretty much eliminating all their sedans. Everyone's moving to these mid-size crossovers. So he's got a product issue just in terms of what the market's looking for.
It's interesting, Ian, because it isn't just a one-time letter that we're getting from Elon Musk that, people might feel emotional and they're reacting today. I mean, I think the reason investors are really listening to this is because what has been setting up even over the past month, right? So earlier we learned this week that on February 1st, that employee customer referral program is going to go away. Discounted models, the cheapest versions, those cheapest versions of the Model S and the Model X, they're no longer going to be around. As of mid-January, the company reduced prices on all U.S. cars early January because of this tax credit, phasing out. And then also multiple rounds, just over the past several months of price cuts there in China. Talk to us about how all of these, pieces of the story are culminating here into one narrative that is a lot different than what we saw just a month ago when investors actually put this stock up about 8% on the year of 2018.
Tesla's one of those stocks that I personally avoided. I went in early and got out, and I realized this is a lot of bout of PR and storytelling, and the actual economics that's sitting here are a little too scary for me. It's a bet I can't a bet I don't feel comfortable making. And I think the truth is, if you heard him on 60 Minutes in that interview, he said we were close to death, and I think he's basically saying we're going to be close to death for a while. He's going to be walking a very, very thin, tight rope until they are able to kind of weather a storm of extreme competition in the space. So there's really nothing else to say. The company has a ridiculous kind of market cap. And imagine, just like every other tech company in the space, this thing might just keep going down and down and down until it finds an appropriate valuation. Most people would say it's overvalued, and I think 2019 is going to be the reckoning for that stock.
Baker mentioned, Ian, that we get these earnings results early February. Do you expect another profit from Tesla?
Good question. Yes, I expect a profit. Thin, but I expect a profit.
Okay, well, I think that's consistent with what Musk is expecting himself there. Ian Wishingrad, founder and creative director at Big Eyed Wish. Thanks for joining us.
Thanks for having me. Take care.